The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 11th magnificent Monday edition of today's Trader's Edge Show. I'm your host, TV Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstances of these markets, what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free, call on in. Now's not too soon. 877-927-6648. Would love to hear from you. Of course, internationally, you can reach us at 727-445-1044. So let's go ahead and get this show started on Magnificent and Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Great to be back with you. We've got the Dow up 131 points, trading at 18,277. The S&P is up about 13 points, trading at 2142. NASDAQ Composite up 43 to Rooney's. She's trading at 5,000 even Steven. The Russell 2000 up 13 points, trading at 1190. The DAX closed up 203 points. The FTSE closed up 92. Gold is flat, trading up a buck at 13.59. Silver's up 33 pennies. She's trading at 20.43. Light sweet crude back 64 cents, trading out at 44.77. The leaders to the upside in the clubhouse, we've got Priceline. That's up 23 bucks, nearly 2% to the upside. NetEase up $10, 5.5%. Reliance Data Systems is up about 5%. That's nearly 10 bucks. Amazon is up about 10. Tesla's up about 10. Google's up about 10. It's really 9 and change, but we're going to call it just about 10. To the downside, it's Stamps.com. That is the leader dollar-wise, $7 to the downside, about 8.5%. And then you go to CoreSite Realty Corp. COR is the ticker symbol, down about 4% out here. CH Robinson Worldwide down a couple of bucks. So nothing really big to the downside. So where do we begin? Well, it's a good question. Where do we begin? Let's go take a look at. Where do we begin? I didn't really, where should we begin? Let's go take a look at the New York Stock Exchange, the NASDAQ Composite, the Dow. Get a feel for where we're at. Just take a look at our advanced decline our advanced decline oscillator out here. Get a feel for where those are at. And then the New York Stock Exchange. Okay, so that's a good place. That's as good a place as any to start out here. Let's take a look at what the NYSE is doing. Here's the NYSE. Now, a really important session is underway. The New York Stock Exchange has got two island top patterns and one island bottom. We're about to find out who it is that is the stronger of the two. The trading sessions, I should say, that you and I are paying attention to are June 23rd. That's an island top. There's actually a small island top that had formed out here between June 6th through June 9th out here. So that high is 10,648. The high from June 23rd is 10,641. You're trading at 10,645. You know, you close above 10,648, and there is nothing more bullish than a failed bearish pattern. Island tops are about as bearish of a pattern as you can get. So what's the number you want to be watching for? It's 10,648.04 inside of the New York Stock Exchange. You get above that, what does that say? Well, as we pull this back out here, one of the things that we know about the New York Stock Exchange is the consolidation pattern that it has been trading within. Now, this is a consolidation pattern really just taking us back to about the, I'd really have to say it's been consolidating ever since about March the 4th out here. We could go a little bit lower, but we'll just say it's right around March the 4th of 2016, and pretty much right now through where we're at. So we're right up at the the top of that consolidation range. The reason that we want to pay attention to that is because if you break above that consolidation or break below, you've got a move. It's a measured move. It's equal to or greater than a consolidation. At this stage of the game, we're going to take a look at what does it look like to the upside, because price is now trying to take on that consolidation. To the upside says if you break above it, the NYSE should head up to about the 11,317 area. Now, 11,317, that's going to take you all the way back to the 2015 highs. Now, we know that the New York Stock Exchange broke its descending trend line. It did that eons ago, but just to show you what trend line it is that we're taking a look at, that's the one coming from the May of 2015 high. So that trend line was broken a long time ago. So that trend is no longer a trend. That's the trend to the downside out here. So we are in a consolidating market with the New York Stock Exchange trying to take out its highs out there. And hey, with inside the New York Stock Exchange, you know, what we've got is the ability to take a look at a couple of sub-indices out here. Take a look at it. I thought I had it right here on my fingertips. It was really not this. Oh, it's right here. There we go. Here is this chart. This chart, you got the New York Stock Exchange up on the, oh, how about that? You got the New York Stock Exchange up on the top panel. The center panel is the New York Stock Exchange for the top 100 U.S. companies. The bottom panel is the New York Stock Exchange for the top 100 international companies. So we just have broken this apart just by a tad. You can see that in all cases, the trend to the downside and the stocks that are pulling the overall New York Stock Exchange to the downside, you know, are the international stocks out here. But even they have broken that descending trend line, right? That trend to the downside, New York Stock Exchange, however you want to take a look at it, done, gone, history, toast, sayonara, baby out here. Now, if we take a look at the top 100 U.S. companies out here, this is already trading back. In fact, they already right now maybe above the high. Its high was formed out here on June 24, 2015. That high was 87.16. You're at 87.10 right now. So this thing here is already trying to break above its all-time highs. When we take a look at this little subset with inside the New York Stock Exchange, things look mighty fine when we take a look at that NYSE. Now, you got a slight problem here in paradise, and that paradise problem might be that as we take a look at the advanced decline oscillator reading, that is the bottom panel of the chart, you're going to see, if you're looking at my data panel, the light blue sessions, the one that says OSC, that's over on the left-hand side of the chart. If you're watching us on TigerTV, you're going to see a reading of 185.56. Now, normally, you get to anything above 150, you get to the overbought conditions. But, of course, you know that markets can remain, especially bullish markets, can remain overbought for a long time. When you get above 150, 150 ought to stop things dead in its tracks, and it has not stopped it today. Unless we're going to see a turnaround Tuesday on a Monday, which is not even in the cards out here, because there is nothing to turn this thing around to the downside. Well, now you're starting to get into that jet propulsion laboratory move to the upside. Now, you really get to that jet propulsion laboratory move to the upside. I don't even know what that means, but you sort of know what I mean when I say that. That would be getting into a plus 300 level. But at this stage of the game, things are looking mighty. Did I say mighty? Mighty fine. Inside that New York Stock Exchange, it is strong like bull. This is Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. I have a request to take a look at the light sweet crude and the directional divergence that it has with the stock market. So we'll do that in a moment. I want to just stay where we're at here, just try to keep things somewhat organized in my mind, if that is even possible. Let's take a look at the NASDAQ composite. So we took a look at the New York Stock Exchange. We know that that thing is long and strong all the way. And you take out that high, that island top on the overall indice out there, there's nothing more bullish than a failed major bearish pattern out there. So don't get in the way of that. If we take a look at the NASDAQ composite, right now trading out at 49.99. The most recent high out here looks like that took place at the trading day was a June 6th. Let's see, that high 49.80. Yeah, that was 49.80, so you're above that. How about back here during the April level? You had highs of 49.60, 68. Yeah, you're above the highs out here. Now, that is a beautiful thing. If you're long the markets, like my clients and I are long the markets out here, we caught that bottom nicely. Of course, you got that nice little island bottom in. That's the little yellow squared box inside the NASDAQ composite that you're looking at. That is a very bullish pattern out here. Now, when it completed that pattern, it completed a Gartley buy. It completed two Gartley buy patterns out here. If we take a look at the one that is just the easiest to spot, if you're watching this on TigerTV, that's where the A point was up here. Looks like that high was at 49.79, 49.766. Yeah, we're going to use the high out here from just just to use the actual high. June 8th is your A point. June the 16th is your B point. Your C point of the A to B equals CD. To the downside is at June 23rd. It makes a 1 to 1.618. A to B equals CD to the downside. That formed your Gartley buy pattern. Now, it formed that Gartley buy pattern simply because of that bull sash candle that had formed right here, and that was on June 28th. And then, voila, on the very next trading session, you get that island bottom. Now, you know that all Gartley patterns at 5 different outcomes. We're now in we're beyond outcome number 4. Outcome number 4 is the 100% movable move. Well, I can't really say we're beyond it. Right now, we're making that 100% move of a move. But if these markets, or when these markets continue to go higher, and look, I expect we're going to see some type of retracement. How deep, I can't say, but some type of retracement, perhaps, out here. I say perhaps because it's pretty strong out there inside these markets. But this pattern here, outcome number 5, in essence, inside the NASDAQ composite, has an A to B equals CD to the upside that says 53.33 becomes the magic number out here. Maybe it's even 55.40. So you start clearing 49.69.32, and it is off to the races. It's already been off to the races, but it's really off to the races to the upside. Now, why is that likely to happen? Look at the advanced decline oscillator out here, folks. It is making a higher high. Markets do not, they can retrace from here, but they don't end when you have a higher high advancing oscillator. Instead, what you have is you have a falling oscillator with prices moving higher. Do we have that now? The answer is no. Absolutely not. So the NASDAQ composite says it wants to move higher. Take a look at that old Dow Jones out here. Take a look at the Dow. Take a look at its oscillator reading, 3.91. It is, if we just take a look at, I think I might have this still open here. Let me see. Did I get rid of it? I don't know. Did I get rid of it? Where did I put it here? Did I not name the page? Oh, that's a different page. We don't want to take a look at that. Not that we don't want to take a look at that, but where did I put it? I might have gotten rid of it. Well, that's just too shabby. That's too darn bad out here. In any event, you've got the Dow. Take a look at that oscillator reading down here. I mean, also up at higher highs. That typically inside the Dow, that is typical. That is a typical pattern of an initiation move to the upside. We're in summertime. There's no reason for these markets to actually move lower. Not anytime soon out here, other than just normal kind of retracements. But this may be a market that is not going to let you in. You had to pay the price of admission back on June the 27th in order to really get into this market, and then it has been pretty much off to the races. But if we look at the Dow, very healthy. NASDAQ composite, very healthy. New York Stock Exchange, also very healthy. Oh, and that we didn't even talk about the S&P 500 making a higher high today, taking out its highs from 2015. It doesn't get much healthier than that. But can we see some type of retracement? Yeah, perhaps. But I don't even see it on the intraday charts out here. But so that takes care of the general market. Let me go answer the question for Dano in the den. He said, hey, would I take a look at light sweet crude and the divergence? So what Dano is speaking of, I do have this chart out here. Here's the correlation chart, which really was in sync out here all the way up into Jobs Friday, right? 8:30, you get the release of the jobs data. This is where my cursor is. So the bottom portion of the screen out here, light sweet crude. Top portion of the screen is the ES mini. That way we can just see the dance steps out here. It's directional. It's not tick for tack out here, tick for tack. But it is directional. And right up until the point of time of that jobs numbers release, we saw the ES Mini just simply shoot off to the moon, another, 30 points or so to the upside by the time the day ended. And we saw light sweet crude start moving to the downside. Now, remember, these correlations, the percentage, if you take a look at historically, and I do mean historically, you go back over, the last 20 years or so, you're going to see a correlation where they both move in the same direction about 60% of the time. That is like taking out a coin and flipping it 10 times. What do you think the odds are that it's always going to be 50-50? And are you willing to bet on heads or tails on a 50-50? And even if it comes out 60-40, is that really the edge that you're looking for? I think not out here. So all that we've really got, my opinion at this stage here, Dano, is we just have where the correlation has just come a little bit unglued for a couple of days out here. Maybe it's going to be unglued and we won't pay attention to it. We'll see out here. But for it to come unglued, you can't trade it like this every day because it's not 100%. It's not 100% correlation each and every day. Even if we take a look at where this thing has been correlating so well, that would be over the last 6 months, give or take how many ever days that might be. The correlation, which is strong, is like 75%. Now, that's an advantage to you, right? That's an advantage, 75% out here. So, but still 25% of the time, it becomes uncorrelated. So that says, well, why is light sweet crude doing what it's doing? And when is it going to stop out here? Well, if we go take a look at the current contract, I'm glad you asked me to do that. If we go take a look at the August contract out here, what we're going to see is we're going to see from the low that formed out here, and it was an A to B equals CD at the upside if you want to see what that looks like. That's coming off of the lows out here from back in February 11th, and we come down to the made nice A to B equals CD to the upside off of the low from April the 5th. Got a nice little dark cloud cover that took place out here on June 9th. That was your reversal signal. That light sweet crude was getting ready to do something else out there. Plus, if you come off that low, that leg from the April 5th low out here, it made it to wave number 7. And you know what happens when you get to wave number 7, especially when you've got a nice bearish reversal signal. It says you ought, well, it could be bullish if it was a market that was moving down. That says, okay, you're about to start moving to the downside. Of course, once you get below Stevie's red line, that's the red line that's on the chart here, and that's exactly what took place on that next trading session, June the 10th. That said, Light Sweet Crude was getting ready to take a breather out here. Now, the interesting thing about Light Sweet Crude is it's completing a 1-to-1 A to B equals CD to the downside off of that 7th wave out here. And that looks like this. 44.68 is the exact 1-to-1 A to B equals CD, but we don't have a cavalry that's arrived yet. Light Sweet Crude could easily get to 43.11. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We were talking about light sweet crude before we went into that breakout here. And we talked about the correlation that for the most part over the last 6 months, about 75 to 80%. I don't have the exact stats. I was keeping stats up until about, 30, 40 days ago. But what we do know is that there certainly is a correlation here. And the beauty of what is going on, here's what bodes well for the bulls out here. Forget about what we looked at earlier, which all bodes well for the bulls. Forget about the S&P 500 taking out its high, which bodes well for the bulls. If we take a seasonality aspect, which bodes well for the bulls out here. If we take a look at light sweet crude, it is forming its own Gartley buy pattern. It's just not here yet. It hasn't arrived here yet. I'm paying attention to a 30-minute chart that's off screen out here, and it looked like it still could be the setup, which would then, in essence, say it's probably more likely tomorrow before it could confirm. But I'm open for light sweet crude pulling back even further. We just don't have a bullish reversal signal. But when that Gartley buy pattern does form, like we looked at inside the NASDAQ composite, you can see the same thing inside the NDX 100. You can see it in the FTSE, for goodness sakes, out here. The FTSE was a thing that was supposed to crush the marketplaces, and it just formed a Gartley buy pattern. That's all that it was doing out there. So we got the same kind of thing, not the same kind of thing. We got the exact same thing going on right now inside of light sweet crude. So we want to keep our eyes on this out here and see when the cavalry arrives. It's just not here at 1:31 p.m. in the afternoon. And the 30-minute chart is a possibility. It's a potential, but I want to see some additional confirmation out there. Okay, so I hope that helps answer the question with regard to light sweet crude and correlations. And hey, speaking of correlations, one of the nice things about having a little bit of time off is in the evening times getting an opportunity to catch up on some reading, the materials, things of that sort. And here's, I want to dispel something, because I hate when people give you all kinds of BS out there. It's all before Steve, because we're going to go ahead and just absolutely straighten it all out for you. Let me see if I can find this chart. Geez, I hope I put this chart up here and didn't simply close that one down. Let me see. Is it this chart here? Oh, that was the Dow chart. That was the one that I was looking for. So that was it. Let's see. Oh, I know. I put it over here. This one, new page 3. I got to start labeling these pages out here. Okay. How many of you believe that the S&P 500, we're just going to use the indexes, that the stock market trades in the opposite direction of the 30-year Treasury? We're just going to use the 30-year Treasury as our indicator out. How many of you are sitting out there right now saying, how is it that stock market can go higher and bonds are going higher too? That something's got to give. How many times do you hear somebody on CNBC said something's going to crack? It's one of them has got to give way out there. I mean, are you not sick and tired of you will be sick and tired of hearing that after you and I spend some time together. You want to talk about a correlation out here? Go back to 1977 as an example. So what's that? 87, 97, 2007. So 40 years, right? 40 years. Let's go take a look at about 40 years worth of data out here. Hey, it's on Bloomberg TV. It is everywhere out here. These guys are telling you the same thing. You know what I'm talking about. You hear this stuff out here where they say something's got to crack. This is just not right. 40 years worth of data. You want to know how often on a daily basis bonds go up and the stock market goes up, or bonds go down and the stock market goes down? Do you know what the answer to that question is? Because if you were listening to these guys on CNBC, you would think, it's like 0%. That it never happens out there when those two things happen. Okay. Hey, look, earlier we were talking about maybe you flip a coin and you get to, you're supposed to get heads and tails. It's 50-50, and you get to 60-40. You're likely not going to go ahead and take a bet on that. It's even less when it comes to bonds. It's 52% of the time that the two correlate on a daily basis out here. So what the Sam heck are these guys even thinking? I know what they're thinking. They just don't do the work out there like you do, or like we do. So that whole correlation stuff that they've got, that, bonds are going to go higher and that means the market's going to go lower. What planet is that coming from? because it is not with regard to the historical data over the last 40 years. Maybe it's only 39 years, 1977, right? So, about 39 years. You go do the numbers. You'll see that that is exactly the correlation. Now, here, you're watching this on TigerTV. The upper portion of my chart is the S&P 500. The bottom portion of the chart is the 30-year Treasury futures contract out here. And if we this is just since December of 2013. By my account out here, if we go take a look, let's go ahead, let's make it a nice green arrow out here. Yeah, we got a green arrow. And if you just come down here since about December 23rd, you can see, you draw that arrow to the upside. You tell me, what's the trend here for that bottom portion of the chart? It looks to me like that's the 30-year Treasury. And if we just simply come to the same point in time, or about the same point in time inside of the S&P 500, what do we got here? We've got a market that has moved higher, especially today inside the S&P 500, right? So you got a market that's moving higher. You got bonds that are moving higher. Ooh, what are they smoking out there to even think that is not the case? Look, let me give you the correlation, okay? Do not correlate. Bonds are moving higher. The S&P is moving higher. One of them's got to give. And it's going to, and then you got to try to figure out which one is going to give. It just does. It's not out there. You got to prove it to me. You got to actually go back and say, hey, all that 40 years worth of data that you did, it's just absolutely wrong. No, that's not the case. The correlation between the direction of bonds and it's not the S&P 500. It's just not. Get that out of your head. The correlation is not that. The correlation is interest rates. Here's the interest rate calc. Here is the 30-year Treasury interest rate on the bottom. Now, I've gone ahead and I've inverted it so that it becomes easy on your eyes out here, so that you can go ahead and take a look at the correlation that is out there, right? You got interest rates going lower. You've got bonds moving higher, right? I mean, you look at the correlation that we have here. The correlation with regard to the direction of bonds is interest rates. It is not the S&P 500. So the next time you hear somebody say something's got to crack, okay, and I think it's the bonds that are right out here, it has to do with the interest rates. It doesn't have anything to do with the S&P 500. That doesn't mean that they can't correlate here and there. I'm not saying that. It's something that historically had a 52% correlation. How could I say that? But the correlation is with regard to interest rates. It is not with regard to the stock market. So trade each one separately out there. And if you do that, so can bonds keep going higher and the stock market keep going higher? You answer that question. The absolute answer is yes. Can they both go to the downside? Yes. Have they both gone to the downside? Yes. Have they both gone to the upside? Yes. Of course. Look, here's a startling statistics. We'll just call those SS's out there. How about, you would think, from the 2007 top, and I'm talking to the day top, to the 2009 bottom, and I'm talking to the day bottom, what do you think that correlation was between the stock market going in the same direction as bonds, whether it's up or down? Because you would think during a bear market out there, it'd be the flight to quality, and the stock market's going down and there'd be no correlation. The bonds would be going to the upside, right? That is the flip of the coin. It's 60-40. That's all it is, folks. It's 60-40 out there. You want a correlation? Interest rates and bonds. The S&P 500 and just the S&P 500. Buyers and sellers, other patterns out there. Gartley buy patterns, things of that sort. This is Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 116. S&P is up 11. NASDAQ Composite up 38 points. Okay, so, we took a look at the daily charts. A lot of really great information, in my opinion, so that you can get your head straight with regard to what you should be focused on out here. And that way you can turn off a lot of the noise out there that just doesn't make any sense. There's no statistics to back up the BS stuff, the before Steve stuff, which we just simply go ahead and resolve that. Now, I mentioned that the market's getting a bit tired out here. It should be getting tired. It has been doing all the heavy lifting, and and we may see some type of retracement out here. So why do I say that? I say that because those are the patterns that I see in the marketplace. If I see something happen on a daily basis, then I'll change my daily perspective. But if we take a look at intraday, just as an example, a couple different things that I'm looking at. Here's a 30-minute chart here for the ES Mini. Inside the ES Mini, what you and I can see. Let me just go ahead and when it made a bottom out here, let me do this. Let me go ahead and update this. Okay. So when it made the most recent bottom, I should say, because it's a 30-minute chart. So back here, as we come back on July the 5th, we saw that the ES Mini, had sold off a bit. That was the last real retracement that was done out here. Price was moving lower, doing a less relative strength out here. You had the cavalry arrive. This is at 11 o'clock in the evening. That is on July the 5th out here, 2300 hours. You had a double bottom test out here. That took place at 11 o'clock on July the 6th. And then it was off to the races. A to B equals CD to the upside. That's what's in place right now. That's coming off of that July 6th low out here all the way up to a move of 10 o'clock in the morning on July 7th. Nice little retracement here, about a 50% retracement. Now you're up at about the 1 to 1.618. It may not be here right now at 2135. It might be 2140. But we're nearing that point in time where we ought to see some type of retracement out here. I'm just saying to you, don't be thinking that it's the whole enchilada out here, okay? Markets are going to continue moving higher for a bit of time out here. This is a retracement is something now intraday trading or whatever. That's a whole different story out there. And at this stage, we can also see, so you got the A to B equals CD pattern underway. You've got price moving higher, less relative strength until that pattern goes away, which it hasn't, not yet, just like we saw down here at the bottom. There's no reason for me to believe we're not starting to approach a point where the market could. It doesn't mean it's going to do it at 144, 2 o'clock, 2:30. It doesn't tell us that that's what it's going to do until the cavalry arrives. And by the way, there's no cavalry in sight as we speak just yet. This is just a potential pattern. Now, I put that together. That's a 30-minute. Let's just go ahead and increase that by tenfold. But in this case, let's go step over to the NQ, right? So that way we can use a couple of multiple equity futures contracts out here. I want to take a look at the NQ, which, by the way, the NQ on the 30-minute chart doesn't have that same pattern. That's why I've just switched over here just to the 300-minute. It doesn't have that pattern, but it has that pattern that you and I want to pay attention to. There's no question about that. That is that wave number 7, right? Wave number 7, which gave way on the S&P 500 today at its all-time high. Nobody knows it better than Mr. Basil Chapman. He's the one, and I believe him. And I see it happen all the time. There's nothing more bullish than a failed bearish pattern. You get above wave number 7. It's basically waving goodbye to you. It's saying, gonna see you in the rear view mirror. So what you want to be doing is you want to be paying attention. You want to be hoping. You want to be praying for some kind of retracement out here, just to give you in, to get a little piece of the action to the upside out here. But if we take a look at the 5-hour chart right now, it is in wave 7. And so it does say caution, Will Robinson. But, 45.19, you're at 45.58. It's 40 points. If it comes back to test that level, that's just testing support. But I guarantee you somebody's going to say the sky is falling. No, the sky's not falling. So we've got a couple of patterns out here on some intraday charts that say, it's getting close to a time period where it's not inconceivable that we see some type of retracement. Inside the ES Mini, the 5-hour chart, not there. In fact, the reality is we're not at wave number 7. The A to B equals CD pattern on the longer-term chart out here, just for the blanks and giggles, and you know how to fill in that word out there. This says you're looking at 21.89 in the ES Mini. That is 65 points above where we're at. And there is actually nothing out here that suggests that that cannot happen. The ES Mini, the 1-to-1, A to B equals CD to the upside in it. The 5-hour chart is 21.89 out here. And they easily make the case that it's more than 21.89. It could be 22.22, room 222. That would be your 1.272 level. But we'll go ahead and we'll take things one moment at a time. Let's take a look at the Dow 5-hour chart as well. That's, well, by the way, the 30-minute chart, just so I can show you that 30-minute chart also, losing a little bit of its energy to the upside. Another reason to say, hey, you could start to see some type of retracement here. How much of a retracement? That I don't know. But the 30-minute chart says, yeah, it's more than conceivable. It ought to occur out here. If we look at the 5-hour chart, though, the 5-hour chart is saying, not so fast. Really, not so fast, Steve-O, because what I want to do is I want to go also do what the S&P 500 did. I just can't do it in the same breath. I want to go test its all-time highs out here. And by the way, the 5-hour chart, A to B equals C to the upside, and there's no reason for this not to complete. 18,581. That is another 400 points to the upside. And before 400 points to the upside inside the Dow futures take place, the Dow will then overtake its 2015 high out there. So be careful. Again, there's a little bit something here for both sides of the trade, but do I see that this as being the El Supremo top for the summertime? The answer is no. It's not in the cards. Am I willing to change my mind when the market tells us differently? In a heartbeat. I am agnostic as to which I cannot control what the market is going to do. What you and I can control is just simply clearing in our head, go looking at the patterns that help us identify tops and bottoms, make sure that we use rulers like an A to B equals CD pattern, like TAS market profiles, like consolidations. Those help us to measure where price will move to, like swing points, right? Like swing points that we can take a look at, and then just make sure that we use money management. This is a game about money management out here. Money management. It's just, and it's do not, I was going to say donut, but then, that would be a donut, and we don't want to do that. Do not use tight stops. you're going to use tight stops. You are telling the market that you know where it's going to stop out here. Don't use tight, especially in a volatile market. Especially in a volatile market. That is the absolute worst time for you to do, because you're going to be right on the trade and wrong on the stop. I don't want you to do that because your money is at risk out here. So use a wider stop. All that a wider stop does is it has you use fewer shares out here. You know, we can't outsmart the markets. There's just no way. What we can do is we can call the markets. We can find patterns that give us the edge, you know, hopefully better than a 50-50, 60-40, but give us the edge. Let the market communicate to you and I. Just simply be willing to pull the trigger to either side. Let's not forget, this is the market that we are still in, for the most part out here, right? We talked about this, I think, last week before I had left all of you. And if we take a look at the Dow, it's still in this consolidating pattern. No real clear breakout, not just yet. The S&P 500, it's kind of saying rear view mirror time for me, but we'll see. This is a monthly chart. You know, the month is not over. It is only July 11th. It is like, we ought to go play craps today, right? Is the market going to crap out? I don't know. I don't think so. That's not what the setup is just yet. NDX 100, still in a consolidating market. Russell 2000, you know, in that little wedgie pattern out here. So let's not get too far ahead of ourselves. I'm not. This is a trader's market. This is a trader's paradise. It may last this way for a long time to come. Here at TFNN. We'll be right back.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow is up 100 a quarter. S&P's up 12. Composites up 41 points out here. Kind of to summarize. Well, let's take a look at the S&P 500. Since that is the one that is up and over the highs out here. At least it's made a new high. If you're watching this on TigerTV, the three panels that you're looking at on your screen, the left-hand panel is a monthly chart for the S&P. The center panel is the weekly, and the right-hand panel is the daily. Now, the horizontal lines, red, green, and blue out here, represent those horizontal trading ranges. Now, what do I mean by horizontal trading range? This is a tool that is a bit of a takeoff from Bud Rolf's primary trading ranges, for those of you that have been longtime listeners at TFNN. And now, because I've been able to automate it, that's where we have a difference. In the case of Bud's work, he would use what he called the primary trading ranges that were on a monthly, and he would carry those over to the weekly and to the daily charts out here. What I have done in automating this, a couple of years ago, was just said on the monthly chart, give me what the numbers are, meaning I'm trying to identify the largest number of co-located opens and closes. You say co-located, what the hell is that? Oh, I don't even know that I can say that. I just did. Oh, well. They can believe that if they need to. Well, what a co-located means is it doesn't matter whether it's an open or a close. Either one counts out here. And where you have the largest number within a small little range out here, that happens to mark one of your horizontal trading range areas. In the case of the S&P 500, by the way, it's at the 1104.47 would be the number. That's not, but we don't use it to be exact out here. There were 24 either opens or closes at that price point. The next largest number out here is at the is going to be at the 1403 and a quarter level, which has 15. And so that establishes these horizontal trading ranges. Now, the little dashed lines out there, the little dotted lines, those are our midpoints. And oftentimes when price gets up to the midpoint, that can act as a reversal area. You can see inside the S&P 500 on a monthly basis, that's in essence is what has been blocking the market in, and we're right up in that area. Now, 2150 is the number. We haven't gotten up to 2150 just yet. But if we see the S&P take out 2150, come back, test 2150, and then move forward, your next level where the S&P is headed to is 2299, give or take some dollars out there. But that is what the monthly chart is showing us. Well, on the weekly chart, because a weekly close is different than a monthly close, a daily close is different than typically than a weekly, except for one day of the week, right? And different than a monthly close, except for one day of the month out here. That's why we have different data points. And this way, on a weekly chart, it's good to see these little different numbers so we can understand these little ranges here. Now, in the case of the weekly chart, clearing 2113, which then means clearing 2150, says you go up to 2224. So you got 2224 to 2291. It's going to be all about the daily right now. And that daily chart out here, it's the 2141 level. We're trading at 2141. We're like right on it. This could be resistance. And that's why I'm paying attention to these 30-minute charts. That's why we looked at the ES. That's why we took a look at price moving higher, doing less relative weakness. That's why we're paying attention to those 6th and 7th waves out there in the 5-hour chart. And we're going to be paying attention to the retracement with regard to its depth. I can't guarantee you that this is not a significant area of resistance. In fact, I can guarantee you that it is a significant area of resistance, even on the index that is busting on out of here. So what we'll do, you and I, each day, I promise you, we will just simply take the new information that the market gives to us, and we will go ahead and let it communicate to you and I. And we will drop our bullish or bearish stance. We're just going to look at what the market is communicating to us. But, folks, it's been great to be with you. Good to be back. But stay tuned, because a better man is up next, and that's our man, David White, and then an even better man. He's up after that, and that's the Tom O'Brien Show from 3 to 5. So stay tuned, folks, for our polar bear, David White, and have a magnificent Monday. I'll see you on Terrific Tuesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.